Hi everyone, welcome back to the channel. I'm Jonathan. I bring you the market news and context so you can save time, you can trade or invest your way, and you can make money. I hope you all enjoyed your 4th of July weekend if you're in the US, or if you're not. Today's video I'm going to bring you the top 3 reasons why you should buy Build-A-Bear stock today. Before we jump into today's list, I want to thank you for supporting my channel, for taking the time to join me today. If you've not yet subscribed and you're enjoying the content, please subscribe now and leave a like rating so that YouTube and the YouTube algorithm know that my video should go out to a larger audience. I do my best to answer your comments as quickly as I can so that we can help to grow this community together and bring you the content and the value that you really want. Let's move on to the top 3 reasons to buy Build-A-Bear today. The top 3 is not in any particular order. Let's start with my first item for today. The first reason I have for why you should buy Build-A-Bear today is reopening demand. After such a long time with people in social distancing, staying away from each other, staying home, not going to malls and not going out to spend money in general, a lot of people would like to spend time with other individuals, friends, family, at least in a smaller group, maybe not in a large group like a stadium. With these topics in mind, especially for teenagers, children, and young adults, one of the possibilities would be going to Build-A-Bear and building stuffed animals so that they could do something collective, or at least at the same time, and spend time with each other. I find this to be a very legitimate reason. If we assume this reopening demand is valid and will continue, then we can assume that Build-A-Bear will be on a solid run for at least the next couple of years. Let's move on to the second item on the list today: financials and earnings guidance. In the previous earnings release, revenue was up over 90%. That's a big number. Additionally, Build-A-Bear released guidance saying the EBITDA would almost double in this current fiscal year because of the extra reopening demand that they've been seeing. There was a caveat. The caveat was that the e-commerce business, all the online shopping that had been taking place over the last year, is likely to only stay stable. This is in comparison to the last fiscal year when the e-commerce demand tripled, 3x. That all being said, the financial guidance and the financial performance, what happened and what is expected to happen or projected to happen, are very positive. The third reason is that Build-A-Bear is a very small cap, micro cap even, and they have a very low price to sales ratio. Price to sales is a way of measuring how much an investor or a trader will pay for each dollar of sales. If we look at the chart, we can see that the price to sales ratio for Build-A-Bear is still quite low, especially compared to the other companies on the list. Now, I know that these companies are not necessarily competitors of Build-A-Bear, but I just wanted to show you what is possible, what other large companies that we know of, that you and I know of, are doing in the market, what their price to sales ratios are. Additionally, the true competition for Build-A-Bear is not necessarily publicly traded companies, therefore it's a bit difficult to compare apples to apples. Right. Build-A-Bear has a price to sales of less than 1, whereas companies like Apple, Tesla, Nvidia, and Facebook all have significantly higher price to sales ratios. So that's the top 3, and I have a bonus item. The bonus item is looking at the previous performance of the last 1 year, going from June to June, so June 2020 to June 2021, we see from Bazinga that the share price performance is better than some of the much more well-known names, better known names. What does this mean? Looking at it through my favorite lens, the lens of believability, there's one question that keeps coming back to me. That one question is this: will the reopening demand, as it is hypothesized, materialize and continue? If the answer to that question is yes, then I think Build-A-Bear will maintain its share price and almost certainly expand its share price, meaning increase in share price. If you disagree with this, you believe that the reopening demand is overblown or has already been reached, meaning there's not going to be more people that want to go to Build-A-Bear, then it seems to me that this is not a believable statement, and these top 3 are irrelevant because it's already peaked. My personal opinion, as stated, is that it has not yet peaked, but I don't know where the peak is, and as I've said, I don't have any relevant market experience. Please leave me a comment down below to let me know if you think the demand for Build-A-Bear has peaked or if it's just getting started. With all that being said, that's all I have for you today. I'll see you next time. But I have a disclaimer. My disclaimer is I'm not a child or a young adult, and I don't have children or relatives that really fit into this category. Therefore, you need to be the one who judges what this really means in the end.